Right, moving into today's trading idea, we start with the first one, Dual Pharma Biotech. So one of the reason why we like the stock, we like the idea as the stock is actually pretty much kickstart a new up cycle following yesterday a solid gap up move. The gap up move, despite we saw in terms of the gain was cut short by midday, and you can tell instead of closing at a high at 1.29 it was closed at 1.26. But trading volume has been quite extremely on the high side, so higher trading volume on the back of the gap up move. And the stock also just broken the long-term downtrend line, which began since February last year. So in a nutshell, the trend has started to shift upward. Now, right now we're expecting some, a new build up in terms of the trend structure. The stock could actually build, consolidate and build a new baseline before eventually to trade higher. But nevertheless, given the strong reaction of momentum over here, particularly as a strong uptick in the trend as well, give you strong indication that the trend has started to shift upward. So we actually recommending technical buy with the downside risk actually sit at 1 14 cent, which about 9.5%, and a potential upside of 23%. So risk to reward ratio is about 1 to 2.4. Resistance at 1.38, and the next one will be 1.55. So I think if there any consolidation within this particular zone, 1.22, 26 region is the good level for accumulating. Now, in terms of the quant style, we are using a value with a scoring of 5.6. Moving on, we have another one, Swift Howlish. So the stock recent correction has ended after the stock is actually staging some sort of the reversal move right within the key support level at 50 cent region. So the what we call that, the correction that you saw earlier from January has been most likely ended. The reason why, because if you look on your left here, there are numbers of the resistance now turning into a support level as well. So the rebound also occur right within 61 point Fibonacci level, while 2 days ago again, so the stock is actually breaking above the 33-day on move average on the back of high trading volume, and equally breakout move in both RSI and D trend. So these actually give you indication that momentum has start to picking up, and we expect a new upcycle start to unfold for the stock. So current level still quite attractive for accumulation. With the risk is about 7.5%, while we put our resistance at 58.5 cent and 65 cent, giving you risk to ratio of 1 to 3, which means risk about 7.5 with a potential reward of 22.4%. Cut loss will be below 49.5 cent, and for quant style, we are using a value with the quant score of 6.6. All right, last but not least will be Care Plus. So you've seen number of the growth stock is actually on the rise over the past few weeks, and we are looking for the laggard as well. So the laggard show in this case will be Care Plus. So the Care Plus in terms of technical reading, it was quite interesting. One, the major so-called corrective move or the decline here was pretty much being kept right within the key support level within 26 to 27 cent region. So if you look on your left, you've seen a quite large number of the what we call that volume profile, indicating this is actually an area for reaccumulation. So because of that, as the stock inch toward the current support level, we think there's a decent chance for the stock to create some sort of recovery soon. And what makes us convinced that there could be a potential what we call that upcycle ahead, you are seeing what we call that a bullish divergence, a difference between RSI, which is creating high low structure, and the share price, which is creating a lower high structure, a lower low structure. So in this in this sense, I mean, the selling pressure is for the past few down cycle is not actually as strong as before. So you can tell that momentum, instead of heading toward the so-called oversold territory. Instead, it's actually quite continue to moving up until recently has just break above their so-called resistance move, and you've seen a significant change in terms of the momentum trend. So while the trend of the momentum has changed quite significant, you have not seen quite I would say strong kind of reversal move yet in the price. So because of that, because of the nature of the leading kind of indicator, we think there's a decent chance for the stock to kickstart a new upcycle. In terms of risk to reward ratio, we think it's quite attractive. With 10% downside risk, granted because of the stock price, and a potential reward of 30%. So that means risk to ratio would be 1 to 3. There is no quant scoring for the stock. And we do think that at the current level is quite attractive for the stock. That means cut loss will be below 26.5 cent. Your next target will be at 33 cent and 38.5 cent. What do you think?